So the topic is cost forecasting. Is what we look at, cost forecasting. You decided to count fingers. So as we are saying, we are beginning that topic, cost forecasting, and we can begin by writing the following. That cost refers to the economic resources used in production when expressed in terms of money. First, cost is also said to be the sacrifice made to acquire something. There are various ways in which costs can be classified. But the most common and relevant in this area, are one, classification according to activity level. Classification according to activity level. Right, that activity level refers to the measure of productivity. In a company. E.g., number of students in a school, number of guests in a hotel, etc. According to this method, costs are classified depending on how they behave. Costs are classified depending on how they behave or change. Depending on how they behave or change as the activity level changes. As the activity level changes. First of all, we have a fixed cost. We have a fixed cost. And we write that this is cost. This is cost whose total amount does not change. This is cost whose total amount does not change as the activity level changes. Does not change as the activity level changes. First of all, it is usually expressed as a single total figure. It is usually expressed as a single total figure. Single total figure. B, variable costs. Variable costs. And write that this is costs whose total amount, this is cost whose total amount changes in a direct proportion, as the activity level changes. As the activity level changes. It is usually expressed on a per unit basis. It is usually expressed on a per unit basis. Usually expressed on a per unit basis. C, we have mixed stroke semi-variable cost. Mixed stroke semi-variable cost. And we write that this is a cost which contains both. This is a cost which contains both fixed and variable components. Contains both fixed and variable components. And we write that unless otherwise stated, the two components are separated. The two components are separated using the high-rule method. Are separated using the high-rule method. Okay, number two, we have classification. Classification according to product. Classification according to product. And write that this classifies costs. This classifies costs on the basis of how well they can be clearly identified. the basis of how well they can be clearly identified with the product. How well they can be clearly identified with the product. Stop. We have a direct cost. Direct cost. Right. That this is cost which can be clearly identified. This is costs which can be clearly identified. Can be clearly identified with the product. Be clearly identified with the product. Full stop. Most of direct costs are variable costs. B, we have indirect costs. Indirect costs. Right, that this is cost. This is cost which cannot be clearly identified. Which cannot be clearly identified with the product. With the product. Most of these costs are fixed. Most of these costs are fixed and are together known as overheads. And are together known as overheads. So basically, that is what we mean by cost. And I think what we have written so far is very clear. Nonetheless, there is anything that you want me to emphasize. See, they are okay. Okay, then down there you write cost forecasting. Cost forecasting refers to the effort made. Refers to the effort made to determine in advance. The effort made to determine in advance the expected amount of cost. The expected amount of cost. This is done by developing. This is done by developing mathematical functions. It's done by developing mathematical functions. Mathematical functions using the following procedure. Using the following procedure. Step number 1. Identify the cost to be predicted. Identify the cost to be predicted. We'll stop still on that point to write. This is referred to as the dependent variable. This is referred to as the dependent variable. Dependent variable represented by delta y. Dependent variable represented by delta y. Point number 2, step 2, dependent variable. Either delta represented by delta y. Okay now, delta y. Step number 2. Identify the cost driver. Identify the cost driver. The cost driver. That is a measurable factor whose change. That is a measurable factor whose change makes the cost to change. A measurable factor whose change makes the cost to change. Full stop. This is referred to as the independent variable. This is referred to as the independent variable. Independent variable represented by letter X. Represented by letter X. Step number 3. Gather data relating to X and Y. Gather data relating to X and Y. Step number 4. Plot the data on a graph. Plot the data on a graph. And identify the pattern formed. And identify the pattern formed. Step number 5 now. Develop a cost function. Develop a cost function using an appropriate method. Using an appropriate method. Using an appropriate method. And the last step. Alice, welcome. The last method is test reliability of the equation obtained. Test reliability of the equation obtained. Test reliability of the equation obtained. So those are the steps that are followed, and you see them as we have the questions. Most of them we will go through them. Now from there, write this. The following methods are used in developing or in forecasting costs. The following methods are used in forecasting of costs. The following methods are used in forecasting of costs. So number 1, naitwa industrial engineering. Number 2, naitwa accounts analysis. Accounts analysis. Number 3, naitwa high-low. Number 4, naitwa regression analysis. Regression analysis. Number 5, inaitwa running curve. Running curve. Yeah, there are others, but I don't think I need to mention them because they are not examinable in our case. I don't think I need to give you a lot of unnecessary information. So these are the ones that we shall focus on. That we shall focus on and discuss. So let's start with the first one, industrial engineering method. Industrial engineering method. Industrial engineering method. And we write that This is where a professional engineer uses professional knowledge, skills and experience, to express the relationship, between inputs and output, in physical terms. Full stop. Janet, welcome. The physical quantities are then expressed. In terms of money, to determine the total costs of the outputs. In terms of money, to determine the total costs of the outputs. This method is suitable where the job is of construction nature. And the item being made is new. It is also economical and time effective. However, it is very subjective. And cannot be used where the relationship between input and output cannot be expressed in physical terms. Yeah, that is what we call industrial engineering. And what happens in this setup? For example, you want to come up with a house. When you want to build yourself a house, most likely you will engage an engineer, a civil engineer. Now, this guy will tell you that the output is the house that you are talking about. That is the output. Then he will give you a list of the inputs that you require. Now, for you to build a house, you may require something like sand. You may require something like cement. You may require something like iron sheets and so on. So he will give you all these items. Then, depending on the size of the house that you want to build, he will tell you the quantities. We call it the BQ. He will give you the quantities. Maybe he can tell you for sand, you require 20 tons. For cement, maybe you require 100 bags. For iron sheets, maybe you require 12 or 20 pieces. So he will give you this. Once he gives you this so-called bill of quantities, you now go to the market and establish one or other the cost of these items so that you express them in terms of money. Maybe you go to the market and find 1 ton of sand is going for 2 shillings. So you then say it is 2 times 20, that gives you 40. You go and find that 1 bag of cement is going for 1 shilling. So it is 1 times 100. That gives you 100. You go to the market and find that 1 iron sheet is going for 5 shillings. So it will be 5 times 20, and that gives you what? 100. So when you total this, that gives you 240. And that tells you, for you to come up with the house that you want, this is the amount of money that you should be having. So if you have the amount, then you go start with the project. If you don't have the money, then you go looking for it. So that once you get, you come and do your house. That is as simple as that. Industrial engineering. It's the same concept we use in our houses. When you want to make food, the very first thing you ask yourself is how many people will be eating that food. Then depending on how many people, you know the quantity of milk, the quantity of sugar, the quantity of rice, and so on. And then you know the cost. That helps you to know that your food will cost you how much. So that is all about industrial engineering. Let's go to the next one, accounts analysis methods. Accounts analysis methods. Accounts analysis methods. Accounts analysis method, and write that this involves classification. This involves classification of costs. Classification of costs as fixed or variable. As fixed or variable. And using the totals. To develop an equation. Of the form y is equals to a plus bx. Y is equals to a plus bx, where y equals total costs, A equals fixed costs, B equals variable cost per unit, and X equals number of units. X equals number of units. Then down there you write that this method is economical and time effective. This method is economical and time effective. Economical and time effective. But it is subjective in regard to cost classification. But it is subjective in regard to cost classification. Cost classification. Okay, so that is all that we mean by so I want us to go to this question of December 2014. December 2014, question 1 is on page 144. Question 1 A. It's on page 144. Is that what you have? Page 144. Oh, sorry. Not December 2014. Sorry, it is December 2004. December 2004, not 2014. December 2004. So if you are there, the question reads that Maisha Meta Products Limited has prepared a schedule of estimated overhead cost for the coming year. The schedule was prepared on the assumption that production would amount to 800,000 units. Costs have been classified as either fixed or variable according to the judgment of the financial controller. The following overhead cost items and their classification as either fixed or variable form the basis for the overhead cost schedule. So we are given all that. Then all the other information, we don't require them for now. So straight on to page 146, where there is the requirement that we are told to determine the cost estimation equation using the accounts analysis method. So what you do with that kind of information is that you prepare here the cost item, the fixed and the variable. We have the cost item here. We have the fixed amount and we have the variable. The fixed amount and the variable. It's one of the simplest methods. So now, the first one is indirect materials. Indirect materials. Now, indirect materials, you can see the whole of it is already classified as variable. So you record it here, 37,500. Indirect labor. Indirect labor, we are told the amount that is fixed is 171,000. So you put it here, 171,000. Then get the balance from the 194. It's how much? 23,200. That is the variable. The next one is rent. Now rent is fixed 236,420. 236,420. Then we have electricity. Electricity. It is the whole of it is variable. So 27,210. 27,210. Then we have depreciation. We have the equipment depreciation. So depreciation is fixed, 181,000. 181,000. Then we have maintenance. Maintenance. Maintenance, 8,500 is fixed. And give me the balance now. 15,830. 15,830, that is variable. Then we have personal taxes. The typesetting there is not done so well. So the taxes are the ones given as the fixed is 6350. So it's supposed to be 6350 utaitoa kwa 14100. The typesetting there is not done well. 7750. Then the next one is data processing. Data, write down the right thing. Oh yeah. Data processing is 9470. That is fixed. Then you subtract it from 11 to 20. 1750. Then we have technical support. That one, the whole of it is fixed, which is 16,940. 16,000. So we now add 629, 680. That is 7,500 plus 23,200 plus 27, 210 plus 15,830 plus 7,750 plus 1,750. You're getting 130? 240. 113,240. So now in this case, the fixed costs is shillings 629, 680. B, it is 113,240. Now this one you divide by 800. Remember the figures are in thousands. The figures are in thousands. So now you divide this by 800 and you get shillings 141.55. Shillings 141.55. So the function y is going to be given as 629, 680 plus 141.55x. And remember, this equation is in thousands. That equation is in thousands. The equation is in thousands. So that is how simple that method is. We are okay with that, eh? Good. So we don't even have another one in the past papers. All the past papers, they have never tested that again, but that is how it is in case they decide to bring it your way. Let's now discuss the next method, NAIROBI method. Are you okay? Next method called NAIROBI method. NAIROBI method. And we write that this method involves identification. This method involves identification of the highest and the lowest. Of the highest and the lowest values of x. The highest and the lowest values of x together with their values of y. Together with their values of y. An equation of the form, y is equals to a plus bx, y is equals to a plus bx is then developed. Stop. This method is simple. Time effective and economical. Time effective and economical. However, it ignores all the other values. And is therefore not very accurate. Therefore, not very accurate. So I want us to use the same question. Now part B. The same question, December 2004. Question 1B. Now going back to the same question, this one, we are going to use the information that is number 3 on page 145. So, information 3 says, following the management instructions, information was gathered on past costs, production levels, and an appropriate price index. The information gathered is given below. So we have the overhead cost, the production units, and the price index. So those are the ones that we are going to use. So our overhead cost will be our Y. Remember we said the cost is labeled or is presented by letter Y. And then the cost driver, which represents the units here, will be presented by letter X. So what I want you to do is to look at the column of the units and tell me which one is the highest. When you scan through those values, the highest. There is 98,000 as the highest. And the smallest, 56,900. So those values, you can cross them with their values of Y. You can match them. So what we are going to do, you start by writing the equation Y is equals to A plus BX. Y is equals to A plus BX. For the highest, to Mepata, it is 98,000. And the cost of the 98 is 777,640. 777,640. Now this is equal to A plus B, which we do not know, but X we know. So it is 98,000 B. And you tell us this is the highest. That is the highest. The smallest to my pattern is 56,900. So there, 56,900. So the cost of that is 717,670 being equal to A plus the units are 56,900 B, and this is the lowest. So that is the first point. You form those equations that way. Once you have formed the equations that way, you now seek to solve. You just draw a line here and subtract. You just draw a line and you subtract so that you tell us 77,640 minus 17,670. You're getting 59. $970, yeah? Yeah. Should be equal to, A will disappear, then you say 98,000 minus 56,900 is 41,100B. Therefore, B should be 59,970 divided by 41,100. 1.459, eh? So this is shillings 1.459. We confine ourselves to 3 decimals. So then you come here and take the first one. You say 77,640 is equal to A plus 98,000 times 1.459. Then you give me A as shillings what? That is 77,640 minus 98,000 times 1.459. We're getting 634. 634, 658. And thus, our equation y is equals to 634. 658 plus 1.459x. 1.459x. So that is the equation. So when x is 800,000 units, when x is 800,000 units, remember first of all this equation is thousands. Eh? Remember that equation is in thousands. So y predicted, when you see y raised to power n, it means the forecast or the predicted. Eh? So the y predicted, you now say it is 634, 658 plus 1.459 times 800. Uh-huh. 635? 825.2. Now there is one mistake that many students do. Eh? Now this is full. Eh? Alafu sasa iko in thousands. Sasa unapata mwanafunzi badala ya kuweka only 800 like we have done, anaweka 800,000. Now that is called using data that is not in the same form. So you must always ensure that your data is in the same form. Good. So that is about the high row. Hiyo tutafanya kaswali kingine, actually utakifanyia saa hii nione. Utafutie. Actually, this is one of the very common methods. Now utaona how it will be appearing in many other topics as we go by and by. So the earlier you make peace with it, the better. But naona nika kitu rahisi sana. A very simple method. Yeah, this one of December 2009 from page 122. December 2009, question 1A, Roman 1, is on page 122. It's on page 122. So, machine hours are your X and the electricity expense is your Y. Eh? So just develop the equation using NAIROBI method. Nione. We find like we have found the other one. Yes. The highest machine hours in the pattern 72. So we say 1020 is equals to A plus 72B. Eh? And the lowest ukapata ni 39. So ukasema ni 750 equals A plus 39B. So based on that, you have gotten B as what? 8.182, and also A you have gotten as what? 430.896. Good. So that is how it's supposed to be done. And something else that I need to mention is that when you are selecting, we only select the values of X, the highest and the lowest. For the values of Y, they could also be the highest, and the lowest like this one, but not always the case. Yeah. So what you pick here for the Y, it is purely guided by the value of X, the cost of that X. So the cost may be the highest or the lowest, but it need not be. So Like a small question I was looking for. I don't simplify it. So sasa we shall attempt this one. November 2017. November 2017. Question 2B. Question 2B. Yeah. So you utajibu yote, or you want to leave us more space for it? Yeah, the assignment. Yeah. So it also captures the next thing that we need to discuss. So let's now look at regression analysis method. Regression analysis method. Regression analysis method. And we write that regression analysis is a statistical method used to study the nature and the strength of the relationship that exists between variables. It is divided into two main areas. One, multiple regression. And number two, simple regression. Let's discuss multiple regression. And write that this is where there are more than one independent variables in an equation. Where there are more than one independent variables. In an equation. First of all, it is the most accurate method. First up, the general format is y is equals to a plus b1 x1 plus b2 x2 plus all the way up to bn xn. General format is where y is the dependent variable. Y is equals to the dependent variable. A intercept all constant. That is value of y that is not affected by x. Value of y that is not affected by x. Bj or just Bj slope stroke gradient stroke coefficient of independent variable stroke coefficient of independent variable. That is rate at which y changes when xj changes by 1 unit. When xj changes by 1 unit, everything else remaining constant. Everything else remaining constant. Everything else remaining constant. And number of independent variables. Number of independent variables. So that is the first thing at the regression. If we were in QA, we would have developed that question. But here in the MA, it is more of interpretation. You'll not be told to develop. You'll be given some figures and you just interpret and put them where they belong. So that is what I want us to do with 1 or 2 questions. And I want us to use this question that was tested in June 2001. Question of June 2001. Question 3, which is on pages 166 to 167. Nisome the theory part of it.
Explain why a high correlation between the independent and dependent variable may or may not necessarily prove that a change in the independent variable may or may not be shown immediately.
That's part A. So let's go to part B. Part A we shall answer as we do something else.
Kelele Company Limited manufactures crockery. The company is considering the use of simple and multiple linear regression analysis to forecast an annual sales for the year 2001 because previous forecasts have been inaccurate. The sales forecast will be used to initiate the budgeting process and to identify more accurately the underlying process that generates sales. The financial controller of the company has considered many possible related variables and equations to predict sales and has narrowed these choices to 4 equations. He used annual observation from 20 prior years to estimate cash of the four equations. The following is a statistical summary of the four equations and definition of the variable used in the exercise.
Thank you. Thank you. So we have been given that data. We have been given that data. And you can see we have the dependent variable. We have the independent variable. We have the coefficient of the dependent variable, the t-statistic, the standard error, the coefficient of domination, and so on. So what I want us to do with this question is to be able to write the equations. Is to be able to write the equations when you are given that kind of data. And the first one is equation 1. The first one is equation 1. Equation 1. Equation 1, the dependent variable is yt. So it will be written as yt equals the intercept. You can see the intercept. It is 2,500,000. Plus the b. B is the coefficient of the independent variable, 5.5. 5.5, and the independent variable is yt minus 1. Yt minus 1. That is equation 1. Let's write equation 2 in the same style. Equation 2. Equation 2, you can as well see that the dependent is still yt. So yt is equal to 5 million plus the coefficient of the independent variable is 0.00005 zt. ZT. Let's write equation 3. Equation 3. We are told to write equation 3. It is also yt is equal to 4,500,000 plus 0.0006, but now zt minus 1. Zt minus 1. And then you write equation 4. Equation 4. Now equation 4, it is also yt. The intercept is 3 million, but it has now, this one is a multiple regression. This one is a multiple regression, and you can see it has been given the asterisk. Now like 2 stars. That means you read down there. So the first one, the coefficient is 50. You can see 50 down there. 50 nt minus 1 plus 0.0001 zt plus 0.00015 ZT minus 1. ZT minus 1. So this one, these three, these ones are simple because it does have one, but this one is multiple. I don't know whether you can clarify. Upper one is simple. Even this one is simple. Even this one is simple. But this one is multiple. That one is multiple. Yeah. The next question, part B, it says, if the actual sales for the year 2000 were 7,500 or 7,500,000, what would be the forecast sales for the year 2001? So that one, we are going to predict using this equation here, equation 1. Because equation 1, YT, ukiangalia hapo kwa question, YT is the forecast sales. And YT minus 1 is the actual sales in the period, the previous period. When you see T minus 1, today is T, so T minus 1 ni jana of the previous period. T plus 1 kesho, eh? Yeah. So using equation 1. Using equation 1, Y predicted for the year 2001. The sales for the year 2001 will be given as 2,500,000 plus 5.5 times 7,500,000. 7,500,000. Forecast that. Okay. 43,750,000. The next one is explain the meaning and significance of coefficient of determination. Coefficient of determination shows the amount of changes. Shows the amount of changes in Y that is brought about stroke explained by changes in X. So that one I don't want to discuss it because it is somewhere ahead of us. We shall discuss it in details and see how to compute it. So I'm only answering to ensure that we don't read the question and answer. Part D, explain why the financial controller might prefer equation 3 to equation 2. Now, if you look at equation 2 here, you see equation 2, the predicted, the dependent variable is the what? YT. So tofauti iko hapa. This is ZT and ZT minus 1. And if you look at our explanation in the question, ZT is the forecast Kenya gross national product, while ZT minus 1 is the actual. So when you are forecasting, you use the actual. Like now that you know me for a while, you can predict me. Useme Kimani namjua hivi na hivi, so chances are kesho atabehave namna hii. But if you have never seen me, you cannot say, I think Kimani nikimuona atakuwa na behave hivi kesho on Sunday, So meaning on Monday atabehave hivi. So you cannot use a forecast to make what? A forecast. We only use what we know to predict the future. For example, when you look at the climatic condition and the temperatures today, you can now tell us tomorrow chances are kutakuwa na mvua ama hakutakuwa na mvua. Now that today hakuna mvua. But you cannot start telling us now that kesho hakutakuwa na mvua ni kumaanisha hata Monday hakutakuwa. That will look weird. It's like what in law they say, you cannot make a promise to make a promise. Ama saa hii siwezi nikakwambia Monday ukuje. Ukikuja nitakuahidi kitu. Now that is wrong because you are making a promise based on a promise. You only base on the past. So to sum that, utasema hivi. Equation 3 is better than equation 2. Equation 3 is better than equation 2. Equation 3 is better than equation 2. Since equation 3 is using the actual value for the independent variable, while equation 2 is using the forecast value. While equation 2 is using the forecast value. Equation 2 is using the forecast value. Full stop, but we can still add something else and say, forecasting is based on actual values. Forecasting is based on actual values. Forecasting is based on actual values. But hii nitakuachia kama small assignment, you look for advantages and disadvantages. Yeah. There are several things I have not mentioned in that question because we have not covered them, but by the time we finish the topic, we will have covered all of them. Let us answer this other one. That's nayo. The question of December 2004. Question of December 2004. Question 1. D. 1D. It is on pages 144 to 146. Now this one, we are going to get it from information 5. You look at information 5 of the question, nasema, when the information above was entered into a regression program using only the production, that is for the simple, I'm supposed to read information 6. When both predictors are the independent variables, when both predictors are entered in the regression program, the following results were obtained. Multiple regression, the equation, that way. Let's first of all write that equation. Y is equal to 632, 640 plus 1.501 x1 minus 59.067 x2 where Y represents the overhead cost. X1 represents production units, and X2 represents the edicts. And X2 represents the edict. So now, according to the question part D, nasema, use the multiple regression results to prepare an estimated cost for 800,000 units in the coming period. So when X1 is 800,000, X2 is equals to, nataka to, you go to information number 2. Information number 2, inasema hivi. For cost estimation purpose, it is estimated that the coming period's value index will be the same as that of the last period, which is 113. So we are going to use 113. So Y predicted will then be 632, 640 plus 1.501 times 800 minus 1113 times 59.067. Okay, now on your own, I would like you to attempt this one. June 2005, question 1, which is on pages 140 to 141. And I only want you to write 3 questions. Actually, you can write like 3 or 6 lines, depending on how you space them. I only want you to write question 1, question 2, and question 3. Just that. Usifanye kitu kingine. Question 1, question 2, question 3. Just that. Actually, you can leave it. You can leave a space so that it will be part of your notes. Umeelewa what I've said there? Just the equations. Naona kama hiyo ya kwanza tulifanya tumeandika question 1 to 4. Yeah, just that. The rest we shall come back. Okay. So that it was about multiple regression. Let's now discuss simple regression. Simple regression. And write that this is where there is only one independent variable. It's where there is only one independent variable. The general format is y is equals to a plus bx, where b is equal to n sum of xy minus sum of x sum of y divided by n sum of x squared minus sum of x squared, and a is sum of y minus b sum of x divided by n. Divided by n. I think that is that simple. I don't want to mix the issues. We can still cover them here. We can still cover them here. So we write that. We cover them here. I separate them. Let me separate them. Let's go. Let's take our past papers. I'm going to mix them. Let's mix them so that I don't forget next lesson. Down there, Nika. Regression analysis. Regression analysis is used to measure the type of relationship. The type of relationship existing between variables. Existing between variables. There are three types. There are three types. Number one, direct relationship. Direct relationship. I'll explain. This is where the variables change towards the same direction. The variables change towards the same direction. It is represented by a positive sign. A positive sign. A positive sign of the slope. Of the slope, brackets B, or correlation coefficient R. Correlation coefficient R. Number two, inverse relationship. Inverse relationship. This is where the variables change. This is where the variables change towards opposite directions. The variables change towards opposite directions. First up, it is represented by a negative sign. Negative sign for B and R. For B and R. Number three, null relationship. Null relationship. This is where the variables do not affect each other. The variables do not affect each other. First up, it is represented by a zero value for B and R. A zero value for B and R. Okay, then down there you write that the strength of the relationship, is represented by the absolute value. is represented by the absolute value of the correlation coefficient R, correlation coefficient R, in that the closer to 1 the value is, the value is, the stronger the relationship. E.g., minus 0.8 represents a stronger relationship than 0.6. Minus 0.8 represents a stronger relationship than 0.6. What we mean by this is, when you see the word absolute, it means you drop the negative sign. So if you were to drop this negative sign, then you find this is closer to 1 than this. Yeah. Okay, then down there, write that. The correlation coefficient is computed as follows. The correlation coefficient is computed as follows. R is sum of xy, sum of x, sum of y. We divide this by the square root of n sum of x squared minus sum of x multiplied by n sum of y squared and R is always between -1 and +1. Let's go to this question of hii tumekuwa tunayo ya December 2004. Question 1. One C, pages 144 to 146. Now this one, it is already developed. So we are just already interpreting. And as I had said, it is information 5. Information 5 says, when the information above was entered into a regression program using only the production level as the independent variable, the following results were obtained. So we have the equation, we have the overhead. Yeah, so now let's write the equation. Y is equals to 626, 547 plus 1.5048, where Y is representing the overheads and X is representing the units. So that one is already developed. You don't have to develop for yourself. Now, when X is 800,000, Y predicted will be 626,547 plus 1.50 times 800. Okay, so we have that answer. Let us now go to this one of June 2003. June 2003, question 4. A, Roman 2. It's on pages 155 to 156. Now that question, for the interest of time, because now that time is not on our side, we will not read the details. I just am interested in the figures that are there. Now you can see where we have machine hours in production departments and maintenance cost thousands. Now the space that appeared there was supposed to represent thousands. So you can add that one. Now when you're doing regression analysis, I want us to do simple regression analysis table, simple regression analysis table. Now, this table has 5 columns in most cases, although not always. So we have a column for X, we have a column for Y, we have a column for X multiplied by Y, we have a column of X squared, and we have a column of Y squared. Now, this data, if you are to use it in full, it will be too huge. It will be too huge. So the best way is to simplify it. And remember, I said the data must be in the same form. So X, badala ya kuandika 800, tutaiandika 0.8, so that this one now we write at 350. Otherwise, ukiandika 800 for the hours, then the other one should be 350,000. Yes, it's not in thousands. The machine hours are not in thousands. The one that is in thousands is just the maintenance department costs. Yeah. The next one is 1.2. We have 350. Then 0.4, we have 150. 1.6, we have 550. Now that data is manageable when you simplify that. Otherwise, if you work it, if you are full, itakusumbua. So 0.8 plus 1.2 plus 0.4 plus 1.6 is 4. 350 plus 350 plus 150 plus 550 is 1400. 0.8 times 350 is 280. 1.2 times 350 is 420. 0.4 times 150 is 60. 1.6 times 550. 1.6 times 550 is 880. 16? 40 when you add them. 0.8 square is 0.64. 1.2 square is 1.44. 0.4 square is 0.16. 1.6 square is 2.56. So 4.822. Or just 4.8. Okay, 4.8. Then 350 square is 122,500. 122,500. 150 square is 22,500. 550 square is 302,500. $570,000. Getting that, eh? Okay. So let's compute the value of A. Sorry, the value of B. Because we already know the formula up there. The formula was N sum of XY. So N is 4. And I hope that 4 is not this one. Eh? How many we have? Eh? Times sum of XY. Sum of XY is 1640. Minus sum of X. Sum of X is 4 times sum of Y, 1400. You divide this by N, which is 4 times sum of X squared, 4.8, minus sum of X squared. So when you seek to solve that, 4 times 1640 minus 4 times 1400 equals, divide by 4 times 4.8 minus 16. You getting that? Sharing 300 per hour. That is per hour. Then A is sum of Y, which is 1400, minus B. B is 300 times sum of X, which is 4. You divide this by 4. So 1400 minus answer times 4. Divide by 4 is 50. Thus, Y is equals to 50 plus 300x. And remember, this equation is in thousands. Equation is in thousands. The equation is in thousands. Although we have not been asked, I would like us to compute R. We have not been asked. I want us to compute R. So R is N, that is 4 times 1400 minus sum of X, 4 times sum of Y, 1400. All this you divide by the square root of N, that is 4 times X squared, 4.8 minus 4 squared, multiplied by N, that is 4 times 570,000 minus 1400 squared, according to the formulas we have given. Oh, sorry, this one is sum of XY, supposed to be 1640. This is 1640 X times you're saying 0.949. Good. 0.949. And we can comment there, right? This shows a very strong direct relationship. This shows a very strong direct relationship between machine hours and maintenance costs. A very strong direct relationship between machine hours and maintenance costs in the above case. In the above case. So that is how it is developed. I want to leave an assignment for you, and it will be part of the notes because later on we shall use the answers. It will be part of the notes. I might miss it, and I have just seen it. Good. I've seen it. It's on page 120. It's a question of June 2010. Question 3B. June 2010, question 3B. It's on page 120. It's on page 120. What we shall do, the sales unit will be your X, 150,000. But below the variable cost, below the variable cost, for a contribution, variable cost, a contribution. Now, contribution utakuwa unaipata as the revenue minus variable cost. 294,820 minus 132,820. You're getting 162,000. Yeah. So just create this formula. You really use it. This formula you really use it. Another simple formula. So don't create this column. Just do the 4 columns. You develop an equation y is equal to a plus bx. Yeah, and it should be part of your notes because we shall use it later in subsequent lessons. So we call it a day at that point. Pick up from there next time. Sitati, I hope you got what you were asking. I've just seen your question. That's all. Sitati? Okay, I've said it is on page 120. That okay? Good.